Good afternoon, everybody.
Good
Welcome back.
afternoon.
Intro music out, and welcome to the stream, David, our chief evangelist. Is this your first time on an Ashram Hours?
This is my first time on an Ashram Hours.
Boom.
I'm so stoked to be here.
Yeah, and not a moment too soon. We've got a big launch coming up in about 6 days. 6 days. Samsara is going live, everybody. Nirvana's first expansion outside of the primary app, which trades in USDC and ANA, and we're moving it into a derivatives exchange called Samsara. So if you didn't know, now you know. And also, high level, today we're going to talk about everything you need to know about Samsara. Not everything there is to know about Samsara. We don't have time for that. There's a lot going on over there. But everything you need to know as far as what to look for, what to expect, why it exists. You know, there's a lot of questions. I get on calls every day with somebody and it's like, oh, why though? Why this? Why that? And what are they? These NAV tokens. And so we want to just drill into that today. And as you can see, Sid is not here today because he is at his desk. He's in the dungeon. We've got him down there. He's coding like mad. He comes up for air, every so often and just checks in with us, tells us what's going on. And there's a lot, in particular, some really interesting infrastructure upgrades that you can enjoy and expect to see. As all things, as you get closer to the moment and you dig in a little deeper and you get a little more ready to go, all these little things pop up. And God bless him. He's a perfectionist and this app is going to be sick. So then I thought, why don't we go live? You and I will go live. We're also going to go live next week. It's just that time of year. It's a good time of year to just get it all in. So I drank a Red Bull pre-stream, so I'm 100 miles a minute now. I was sitting here. I was like, guys, there's no scotch. This is Red Bull. I'm on dry Jan, but I didn't swear off wings. So here we go. Should we do a preamble or should we just get into it? I was about to be like, how was your holiday? I don't think anyone cares about that. I think we just want to talk Samsara.
Let's get into it.
Nobody wants to hear about
Samsara.
3 kids home for 18 days straight. It's nice to be back. Very excited. Love my kids. Love spending time, but let's get after it. If you have questions, which I assume you do, please put them into the general chat in the Discord. We will do our best to get to those as we get down the stretch here. We're going to stay pretty focused on our flow regarding the app for the first bit. And then, as we get down the stretch here, I would like to take some cues and you guys can direct the conversation a little bit. Okay. David, why don't we just start off with NAV tokens, Samsara. What's going on here? I think for this, we'll pull up our screen share. Keep in mind that this is not what the final app will look like in its entirety. There are some interesting things that have not yet been pushed live. This is the Break the Floor demo and DevNet. So you'll see some copy on here, like break the floor, 50K break the floor challenge. That's over. Anyways, why don't we pull up the screen share and let's just start shooting the shit on Samsara and get into it.
Let's do it. Yeah. So the original idea for Samsara came to us because we saw ANA, we saw that it worked. We saw that we could create a structural store of value with USDC. So the next logical step was, what if we can store value in other assets? And that's Samsara. And the end result is NAV tokens, which are the first derivative engineered to outperform. Usually when we think of derivatives, we think of things like perps and options, and these are really designed for and optimized for short-term trading. But the beautiful part about NAV tokens is they benefit long-term holders. They're engineered to outperform the base asset over time. So what you get is you have this NAV token that is backed by a reserve asset. So you get NAV SOL backed by SOL. You have NAV OR backed by OR. And as people deposit that base asset, the NAV token price rises against its base asset, multiplying your upside. And at the same time, the NAV, which is the mathematically impenetrable, redeemable price that can only rise, denominated in the reserve asset, follows that market price with it, locking in that growth. So you have multiplied upside, you have mathematically protected downside, and then of course the NAV unlocks zero interest loans with no liquidation risk, which makes this whole thing really efficient.
Yeah, and there's a lot there. There's a lot to unpack. Great intro, by the way. That is really the elevator pitch in a minute. And so I think, like, where do we place this? You know, where do I place this in my mind as a trader, as somebody who's messing around with crypto, who's buying and selling tokens and like looking to make money? And it reminds me of perps back in 2017. They kind of came out of nowhere with BitMEX. Shout out to Arthur Hayes. He invented a monster. And but these things are like, they've come so far. They're hyper liquid. Shout out to hyper liquid. But like, you know, they kind of run the market now. You know, you just, you see price moving less driven by spot, more driven by perp volume. The reason I draw that comparison is because when they came out, first of all, not a lot of people knew about them. Not a lot of people used them. Not a lot of people understood them. I think there's still a lot of people who trade them who don't understand them. That's why you see a lot of like puzzled faces when liquidations happen. And so this is a new derivative. You know, we have invented a brand new derivative, and it comes with a set of properties that frankly are very intriguing to me as a trader. I say that as, you know, I put my trader hat on because as David described, you have trading against ore. So I'm going to pick on ore today because I got a bag and I'm a big fan of the project. And if I want to buy NAV ore, first of all, the question is, why would I? Well, as described here, and you can see it on the chart. Now, this is our DevNet. So like these were faucet ore. You could say, you know, we ran it up as best we could with everybody. And we said, hey, we're going to crash this thing. We're going to try to sell this thing into the floor and destroy value, right? And so we did that. But as you can see here, it has two prices. It's got the market price, and that is the price at which I would buy and sell NAV ore. And then it's got this floor price, the NAV. Okay. And the NAV can only rise versus ore. That's just what it is. The 100% of the supply of NAV ore could be sold at this price. And so the result you get from that derivative, this NAV ore token, is that it can outperform. In this case, that is shown on the website. When you come to this homepage, you're going to see Ascent. Hover over it, you'll get an explanation. And this just highlights what's great about NAV tokens is that this is the outperformance versus ore in ore terms since launch. So if I took one ore and I bought some NAV ore, versus USD. So if I took one ore token and I bought some NAV ore, I would have 17x more value than if I didn't. And that's because versus ore, this thing has gone up. And so because these all start at $1, because there's no NAV tokens in existence right now, the first ones will be minted when we go live. And there's no airdrops, there's no pre-mines, there's no investors waiting to sell these on a vesting schedule. And so if you're the first person to mint a NAV token, you're the only holder. Can't sell on yourself. And so what you get is this kind of start from zero where the liquidity and the value of a NAV token is driven entirely by demand. And I really like that story because what we're seeing in the market, which is driving me a little bit crazy, and I think it's driving everyone crazy, is that you have these tokens coming out, and God knows why they launch the way they do. You know, this token launches at a 2 billion, this token launches at 4 million, this token launches at, you know, and it's one of the things people liked about meme coins. They say, oh, like started at zero, the bundlers and snipers now, but like it started right here, and then it, you know, it became what people thought it was worth. And so borrowing from that, you know, NAV tokens, they don't come with any baked in supply. It's 100% demand driven, self bootstrapping liquidity. So all that to say, as you tie this back to why NAV tokens, it's because they can capture significant upside versus their base assets. And all the while, this NAV trails up behind it, and so caps downside as it grows. It's a longer roundabout way of saying what you're saying, but just kind of breaking it down. And there's one thing for the Nirvana knots in the chat I want to point out here. This is just crazy. I love it. I'm going to zoom right in here. So those of you who know our app, you know that the Nirvana app has some upgrades coming to it, some updates, and one of them is relating to the floor. And so let me show you this before and after right now. For those of you who are around at the end of last January, almost a year ago today, we had our last trigger price hit, our last floor rise. And the current V1 sort of design of Nirvana in its current form, the price or the floor, the NAV can only rise as demand hits, right? Once the trigger price hits, which you can see here. So this is where price needs to rise. The protocol determines there's enough liquidity for us to raise the floor for the whole supply, and it happens. And going back here, and these updates will be applied back to Nirvana very soon. Two things happened yesterday when I was on a call and I was playing around with this demo, and I sold some Navor. And you can see here on the chart, as that selling happened, I paid some fees, and that fee was directly delivered to the floor, which means everyone holding a NAV token just increased their credit capacity. Before you could borrow 9 or now you can borrow 10. And all that happened is somebody decided to sell. It's an insane unlock if you think about it. It's like, yeah, I'm feeling bearish. Everybody wins. And then before it got back to its all-time high, the floor rose again. In other words, and this is the adaptive price curve. And I don't even think our community fully understands the gravity of this. That's why I want to unpack it. The adaptive price curve basically means that as the market price drips back towards the floor, the trigger price lowers with it. And that's something we hadn't had before. And so, going back to Nirvana app, applied to this, you could see what a difference that would make. Looking at this price curve. So in other words, price was here, now it's back, was here. And this trigger price just stays dormant. With adaptive price curve, it comes back down with it. So basically 2 massive unlocks for ways to sort of keep that floor moving. And that's the whole thing. We want the NAV to be active, because when you have an active NAV, it can only go sideways or up. It just unlocks more borrow capacity for everyone. Anyways, off topic, hot little side note, but adaptive price curve is live, and so is the fee to floor. And those are both live on Samsara from day one. If you don't find those extraordinarily exciting, it's just because you're new here, but trust me, those are major unlocks. I love those. And they're coming. The plan is to have them live on Nirvana quite soon as well. Maybe you could take us through this homepage. There's a lot going on here, David. I arrive at the website. I am welcomed with this array of data. What do I look at? What's going on here? Why?
Yeah. So at the top, you got revenue, trade volume, and loan issue data. Under there is where it gets interesting. All the markets. So these are your NAV tokens. So if you look at these columns here, the first one is Ascent. So what Ascent is the all-time performance of the NAV token versus the base asset. So what's the multiple for NAV? It's
currently sitting at 17.13x.
17.13x. So that means if you were the first buyer and you deposited 1 OR at, there's the fee aside here, then your 1 OR you deposited would be worth 17.13 OR. So it's just measuring the all-time performance against OR. So that's different than all-time performance against USD.
Yeah, I misspoke earlier. This is versus OR versus base asset.
Yeah, but if you want to see all-time performance versus USD, you can look at the spot price. So the way these work is they start at $1 worth of the reserve asset. So it starts at some fraction of an OR, $1 worth of OR. And then the spot price will actually show you the performance all time versus USD. So right now it's at 11 something. So that means spot price is up, 11.59. So spot price is up 11.59x from the very beginning in USD.
Yeah, and that's a decision. Honestly, we almost revisited this week. I feel like we've landed at starts at $1 worth of base asset. But the idea was that if each one of these starts trading at $1, and you can only buy it to start, there's nobody holding it, so you can't sell it. then it easily lets people see like, okay, this is trading for $11.59, so that it's up 11.59x from the beginning. Yeah. So anytime you want to see what's going on with these, hover over it. We're actually building out a walkthrough as well. So when you arrive at the site, there'll be a little tour to take you through this stuff. And then the last piece here that's unique to our platform, that is something you definitely want to understand, is the floor. Principal protection. Capped downside. So as we talked about, these can outperform. They trade against the base asset. So if I think bonk is going to rip 10x this year and I want to pick up some bonk, well, I might as well pick up the NAV bonk because it can outperform. So if it outperforms bonk by 2x and bonk went up 10x, that's 20x, right? So it multiplies really interesting if and when one of these assets is outperforming USD, which I hope they will this year. It's looking like a good start to the year. And the next piece, and I think the more important piece, because leverage already exists, right? It's not hard to find a place that will take your money and lend you some margin against it. Those are called perps. You can get leverage loops on DeFi, but they come with a ton of risk. And I think most people who try to outperform, let's say Bitcoin, for example, by using perps, they don't outperform Bitcoin. I would say like 92%, maybe more, don't actually end up outperforming just holding Bitcoin. You end up with paper cuts, you end up with deep losses. And of course, on lots of times during the year, usually 3 to 4 to 5 days of the year, you end up with some pretty massive liquidations. And so the outperformance is not something that's hard to find, or at least the potential to, but the capital protection. That's the biggest piece of this, in my opinion, the piece I like the most. And so what this floor demonstrates is how much of the current price is backed by the floor. So let's point that out, backed by the NAV. A lower percent implies highly speculative premium, whereas a higher percent implies deep safety. So for example, if this read 99%, that means the market price is sitting at the floor. And so higher percent is quote unquote safer. Let's click on bonk. It should be closer to its floor price, as you can see here. So, it's sitting this percentage off, and you can see that same metric here where it says 15.1x, 16x, principal protection. So 71% covered. That means if I was to use some bonk to buy NAV bonk or mint NAV bonk at this price, 71% of that bonk is covered by this floor, meaning inverse of that is 29% drawdown on my bonk position if I had to sell at the floor at some time later. And taking another example of a lower percentage, let's go over here. So NAV Ray is further off the floor. So it's less covered. And it's fine. It could go higher, could go lower, like any asset. But the NAV is going to only cover 42%, which means inversely, 58% is my maximum drawdown. If I was to buy NAV Ray at this exact price and I had to someday sell at the floor for some reason, 58% is the maximum I could lose of my Ray. And so this is just a nice metric to let people know, here's the upside since inception, and here's your max downside versus one of these assets if you buy here. This will all become, again, same way perps was kind of like super strange and odd in the futures world when it first came out. And now it's kind of obvious. And at least for me, like I've traded them a lot, people know them. This feels like a lot to you. That's because it's entirely new. There's really no comparisons you could have here with something that exists. High level though, I want to talk about the kind of rewarding nature of this exchange because it really blows my mind. I was tweeting about it yesterday, and as I read it back, and I was like, damn, I don't know any exchanges that dish out 50% of their revenue. It's kind of crazy. Hey, we're going to run a business. We're going to provide a service. We're going to provide a product, and it's going to generate revenue. And 50% of that we're going to give away. And that's exactly how this is going to end up working. So let's take NAV OR, for example. Looking at NAV OR, And there's two places. In fact, this is a good time to talk about governance. There's two places. Where is it? Floor investment. Yeah. So currently 55% of protocol fees. So we're assuming 50% of this has already gone to the platform, which is pretty standard. And we're talking about what's left for the protocol itself. And so that makes up 50% of total revenue. So 55% of that goes directly into the floor for the asset, pretty much in real time. And so we're going to look at that. What does that look like here on OR? Well, we saw that actually here. As I sold yesterday, I was on a call and I was like, look, watch this. And so I sold the asset, but that charged me a fee. And that fee went directly into this floor, a portion of it. Pretty significant portion, 25%. And so the floor actually went up. So anyone's sitting around like, I want to accumulate OR over time. Well, their NAV OR position just increased in its minimum redeemable value forever, which means if they had already max borrowed to go stake back on OR, well, now they can borrow even more. They didn't buy anything else, but their non-liquidatable interest-free loan credit line just increased. So that's the first way that the fees go back into sort of users' hands collectively. And then the other piece is Prana, which we weren't going to dive too far into today, but I'm sure we have a few new eyeballs here today that are curious about this. Prana is the token you earn if you buy and hold the ANA token, or buy and stake rather. So when I go to stake my ANA, I staked some here. I'm earning about 1.85 Prana per day on this test account that I have. I can go and I can govern, and these are the stats all time. Historical Prana revenue, 130,000 in year one. And that revenue just increased from 15% of this protocol's revenue to 50. So that's nice. But we're going to make another use case for Prana with Samsara. So flipping back to that, if you want to bring that Prana over here, at this point, you can deposit it and earn a share of this. So I can claim my rewards. On this testnet environment, I've earned 3 OR, which is a portion of those fees again. Excuse me. So a portion of all the fees collected go into the floor itself, lifting all boats forever. And a portion of those fees go directly to the Prana stakers. Now, for those of you following really closely, Thomas Sid, our founder, he just introduced a new concept, which is really going to fly for Prana, where you don't deposit it and passively earn revenue, but you actually burn it and you earn a share of that week's epoch's revenue. I don't think we'll get too deep into that today until the UI is ready. We'll do a tutorial on that. But for now, and that's possibly going to be live. He's pushing really hard today to get that live for day one. But for now, the idea with earn is some of this revenue goes into the floor and some of this revenue goes to the Prana bros. Anyways, very rewarding exchange overall. I mean, the fact that you have an exchange that takes 25% of its fee revenue and just lifts all boats with it at all times is crazy. And so I really do think that as understanding grows and the story spreads, people that are bullish on any of these assets that we've listed, and this is just our testnet. We're going live next week. First one live will be Soul. Second one is a mystery. We had listed one in particular on our roadmap a few months ago, but that might change. We have some last minute shuffling going on, but generally speaking, we're looking at these assets minus MSOL. We're going to go with Soul. So if you're bullish on any of these, the design from top to bottom is to make a NAV asset a no-brainer. Anyways, I'm going hot, David. Where would you like to lean in here? I guess portfolio page is next.
Yeah, we can do portfolio page. Quick pro tip on the floor coverage. So the floor coverage is also identical to your maximum loan to value ratio, your LTV. Ooh. So if that coverage is at 60%, that means you can borrow back 60% of your deposit as a loan, of course, with zero interest and zero liquidation risk.
That's a really good point. So this is essentially your LTV if you were to buy at this moment.
It's exactly your LTV. Yeah,
exactly your LTV. And what's crazy about that, at one point early on, I talked about like LTV could exceed 100%, and that's technically untrue. And what I meant by that, so let me clarify, because I think some people think that as well. Obviously, A non-liquidatable loan can't exceed 100% LTV. But the reason I said that is because, for example, let's say down here, day 2, I aped into NAV ore. I bought some with my ore. Let's say I put in 100 ore. And right away, my LTV is 60%. So I can buy NAV ore with 100 of them, 100 ore. And then I can borrow 60 ore against that right away. I pay a one-time fee and I'm in the wind. No interest, no liquidation risk. And I don't mean like protected from liquidation, maybe less likely to be liquidated. There's not even a liquidation engine here. Because it's a closed loop lending system against this algorithmically enforced reserve that is filled with ore, there is just literally zero liquidation risk. The engine doesn't exist. It just can't happen. It can smash into the floor 1,000 times. And it's lending you up to that level, so it won't liquidate. So important point to point out. But as this NAV rises, in this case, let's see, what was the value here? 0.04 or to 0.06. So it's up 50%. So this NAV just rose 50%, which means I can now borrow more ore against that same NAV ore I bought. Eventually, possibly, if this grows, as it grows, I can borrow more than the initial 100 I put in. And so in effect, you almost get more than 100% LTV, right? It's like you ape in 100 ore, and maybe in a few months or a few weeks or a few days, whatever it is, you may end up being able to borrow out more than your 100. The reason for that, it's not magic. The reason for that is because the collateral you're borrowing against, this NAV ore token, has increased its own NAV in value. So I crave a really cute, well-designed visual explainer video, and that's coming. We've been scripting them, building them out, and frankly, as much as I wish we had one already, I'm glad we don't, because there's some changes that are happening in real time to the app, and we want to get one that's timeless. But as I explain this out loud without like a really cute visual to go with it, I can feel the odd person watching going cross-eyed, but don't worry, we're getting there. Now, once I've bought some, and I've got some of these in my portfolio, which I do on this DevNet, I click up here. This was not live during our Crash the Floor or Break the Floor campaign. So for those of you who are here since then, this nice little button up top, anywhere on the app, you can find it, and you just click to it, and it takes you to your portfolio view. Maybe you could take us through that, David.
Yeah, portfolio view. It's just the one-stop shop where you can see all of your holdings. So it shows you one column for each NAV token you're holding. You've got price, debt, unclaimed rewards, Prana deposited, NAV holdings, and equity.
Everything you need to see in one spot.
Yeah.
And actually, there's a few other changes to this. For example, this DevNet, you hover here, you still see a tooltip. I think that's already been updated. It's just not pushed live yet. This is still the break the floor. So I cannot stress enough how like probably 70% of what's been built is actually showing here. But you got to have a portfolio page. Once I've bought something, I just want to go to a place that shows me what I hold, how much debt I have, how much rewards I've earned. I'm going to go claim, so I can claim my rewards here. And then equity is just your holdings minus your debt. And I've put in a strong request before we go live to have a nice little P&L showing beside here, because everyone wants to know that. It's like, okay, all the noise aside, I bought this for this much. What's it worth now? How much am I up? How much am I down? So all of that kind of more intuitive standard stuff. And then even things like, share this to Twitter and have your P&L card, QR code, come and join. And someday soon, we'll say under 2 months, we'll have ref links as well. Because if you share this with the world and they come and join on your name, you should be rewarded as well. Can't be the most rewarding exchange in the world if you don't have ref link revenue. So that is coming ASAP. And you can click through these. Let's click through. What do I got? I got a bunch of NAV JLP. So I click through to that token page. Because it's DevNet, the data is quiet right now, but you'll be able to look through your revenue collected, the deposited NAV, position debt, deposited Prana, and last but not least, all your own personal information regarding buying, selling, borrowing. So, my trades, earn, how much have I earned from it? So all of that kind of data, and you'll have this nice filter you can use. And this is really key stuff. If I want to come here and trade on an exchange, I need to be able to look up and find all my data. Someday, also on our roadmap, is actual tax forms. The end of the year, it's tax season. I don't want a CSV file and have to figure it out, even though Claude could probably do it for me pretty quick now. I want to come here and just be able to print the thing I need for tax season. So that's something Sid's also talked at length about. And I think the only other thing here that's important is these 3 little dots. So NAV deposited. So when I buy a NAV token, it's automatically deposited. I buy it, it's in my deposit contract, because the vast majority of people, when they want to go buy one of these things, they want to borrow against it. So why force the deposit? Or, why make someone then go? It's much smoother this way. So as soon as I buy this, I can go and I can borrow against it. I can borrow some JLP against my NAV JLP. And I can then repay. But the idea with this page here is I should be able to do all of those things from my portfolio view. So I can borrow, or I can deposit, withdraw. And it's like, why would you want to withdraw your NAV token? Well, maybe I just want to go sell it on a DEX. We have Titan DEX integration coming. We'd like to get Jupiter integration down the road here as soon as possible. And so there is going to be reasons why someone might, or they might buy it on those locations, and then they come to our app and they want to deposit, withdraw. For debt, borrow, repay, I can do it right on my page here. And then for Prana as well, deposit and withdraw, which will get weird once we do the burned arm. But like I said, we'll touch more on that next week when she's live. Anyways, I'm very excited. Now I'm getting some nice messages in the chat. Some people who used this during Break the Floor, and they're saying, wow, like a lot of really nice updates since then. And like, I don't even know the final form of this. Like, Sid has been so heads down. I've talked to him twice in the last 2 weeks, like on a call, because he's just like, you got to handle these things. Cause I'm just like, he's just like, he's in psycho mode right now, which is nice to see. Cause he always comes up for air. And then he's like, oh, by the way, this is now this. And it's like, it's always so much better. So excited for that. Yeah. What else we got? We got some questions in the chat. Anybody who's got cues, now's a really good time. Oh yeah, Foxter, what is the go-to-market plan on the marketing side? Content partnerships, day zero integrations, the whole lineup. We haven't seen much on that front lately. I think a lot about people are just curious about what's been cooking behind the scenes, especially by the marketing team, Ben Zimmer. Anything you guys can safely share? Confidence ready to roll out at launch. I wanted to hand you the first question, but that's more of a me question, isn't it?
Yeah, you can take it. I'll
Nice.
briefly open it up with like,
Yeah.
we're really leading with activating communities. Each NAV token is a new exciting, it's a new launch for these existing token holders. It's another chance to be early, and it benefits each underlying reserve asset, because the only way to mint a NAV token is to deposit that reserve asset. So these NAV tokens act like a sponge, soaking up supply. And so we're finding a lot of success with activating these communities. There's a lot of people that are really excited about this new derivative, and that's how we're going to bring in value to the ecosystem. Obviously, like, ANA holders are excited about Samsara, but what we really want to do is expand to all of crypto and offer something that's truly beneficial, a derivative that has never existed before, with a value proposition that's never existed before.
Yeah, and that honestly has been the challenge. Welcome to my life. Like 9 months of talking to teams, outreaching to token communities and teams, and talking to them and just taking them through this. And they're just like, oh, like that sounds really cool. Yeah, wish you the best. And they're not all quite ready to just jump on it and be like, hey, we're going to cross promote this thing, because a lot of them want to see it. They want to see how it works. They want a deeper understanding of it. We've got, I'd say, 2 teams that are pre-TGE at this time that I've talked with at length, and they're really excited for this. They want to run a full-blown treasury strategy with their buybacks of their tokens. Like, why not? There's a lot of teams that have a lot of their own token in their treasury, so they're buying back, but they're not burning. One that's pre-TGE, and they're already, buying back, essentially accumulating points that would otherwise become tokens. And they're really keen on this product. So down the stretch, those two are top of mind for me as far as like full-blown engagements. And then there's a handful on this list that we've spoken to, and they're in various shades of like hot, maybe like this is something we'd really like to jam with you on. And I think a lot of that gets easier once we're live. So one of the reasons we're going live with Sol first is because it's a pretty generic asset on the Sol chain. It's the main thing that's paired with a lot of tokens, and it's very liquid. And it's not a team, we don't imagine like the Sol team is going to come out and do that. It's a nice starter asset that just helps us demo this. We've got teams calls lined up. I mean, honestly, constantly. Breakpoint, we met a lot of people. Just had another one reach out today who's like, hey, I heard about this. Sounds really cool. So-and-so spoke very highly of you guys. Like, we want to chat. So I have that call lined up for tomorrow. So is there, a massive splash of major partnership announcements lined up in the next 5 days? No. But there is a pipeline of teams that we're speaking with. And as things go with this kind of product, like we talked about, it's not likely. It's one of those things where like I shoot for, let's line up everyone pre-launch. But the more likely outcome is post-launch, as things start working, as people start to pay attention to this, as the attention grows, you return to those conversations, say, hey, you can see it's trading, it's live, it works. Notice that we did the break the floor campaign, and all that kind of data comes together. And then I think, I'm very optimistic that we'll have some interest from some really interesting teams. And, as it turns out too, like the interest we do often get, which we're weary of, is, from much smaller projects, maybe with less quality assets that are just like, hey, put us on there. We just, we'll take anything. And then, and we want to really walk the line there, because I don't want to list like a 50K market cap shitcoin, to take an extreme example. And, ultimately this is a platform where we want to see like really high quality assets trading. And so it's about finding that right balance. On the Ben Zimmer front, we had a nice long call with them yesterday. We meet with them pretty much daily, and they've got 5 video assets in production in various stages of production. We're hoping to get one really quality one live just before the launch next week. We've got some more like mid long form type explainers in like the 3 to 5 minute range that'll live on our website in production as well. And campaigns, we got the rally campaign just went out this week, so we just want to engage and activate people on socials and just tell the story. But the nature of this launch, because we're going live one asset at a time, it's not this thing where it's like, hey, you're out there, and then it's like done, on to the next thing. This is almost going to be like a 1 month launch window, right? Where the platform's live, NavSol is trading. 2 days later, the next asset starts trading. 4 or 5 days later, on the next Monday or Tuesday, the next asset. And so really 2 assets per week listing, and each one is its own TG. Each one starts at 0. And so you're going to have this kind of green candle factory effect, because at launch, these things cannot go down. There's just no supply out there. They have to be minted. And when you mint, the value of them increases. So I think the legend will grow with each launch as people start to share and talk about this stuff. The math and the structure of these assets kind of takes over. So, not exactly as I envisioned it. Honestly, last summer when I was thinking through our go-to-market, I was like, oh, like we're going to have 1,000 people at the gates, 10,000 people at the gates, everyone banging down the door. And what I realized, and what is just the fact and the reality is, when you don't have an airdrop point system, and when you don't have, a large war chest and, a cap table filled with 25 KOLs that are all here to tweet you out, it's just a different approach to the market. It's a more pure approach. It's a less, adrenaline inducing approach, certainly. But it is kind of the nature of our product. We don't have 10% of the supply to just give away to people to like shine up our windows and drive excitement. And I'm honestly okay with that. I think when you look at something like Lighter, just got a lot of press in the last week or so with their major airdrop and the TGE. You know, the perp volume dropped significantly once that snapshot ended. And so, you just got to ask yourself how much of that is real. And I always cringe, shout out to Lighter. You guys doing a great job. I haven't used your exchange, but I'm not hating. I'm just saying that is what we're up against, right? When you have airdrop campaigns. But I was saying is I always cringe when I just see people just like tweet out, like, here's the 15 protocols I'm farming right now. And I'm like, so like, it's just so blatant now. It's kind of like, hey, I'm going to go use this thing purely so that I can extract the free value they're giving away as part of their launch and go to market. And like, it works, you get attention, you certainly end up with more initial users than you would have had otherwise. It's just not in the playing cards for this exchange. This exchange is going to produce valuable assets that are exactly as valuable as there is demand for, and not a penny more. And that does change things. It changes the approach to this go-to-market, and it changes sort of the tools we have at our disposal. But anyways, I'm excited for the launch. I think the attention grows fairly exponentially once you have a live product. And like, as I described, the nature of these launches. I guess we should talk about the launch fee decay.
We should. And I just want to chime in on that really quick. Yesterday you said, man, we gotta tighten up the pitch. This is so complex to explain. And I'm like, yeah, you're right. Bitcoin had the same problem.
Yeah.
And that didn't stop it. And there's a lot of moving parts here, but something that's really simple that everyone will grasp immediately is that this is the first asset class in the world that I'm aware of that can only go up from its launch. It starts at $1 worth of the reserve asset, and it can only go up from there. And so this is
the first buyer will be in a very strong position.
Exactly.
But having said that, there is a sniper protection mechanism. So being the first buyer may not be the best thing. If somebody just trolls and buys $1 worth at the start, it maybe could take us through that. I'd like to pull up the visual, but I don't quite have it on the proper screen share. But it's pinned in our Discord. It's a very simple curve. Maybe you could briefly describe the rationale there.
Yeah. So, piggybacking off of what we just said, the price can only go up from launch. So, and there's zero downside from that initial launch price.
From the very first,
from the very first launch price. So of course, everyone wants to be the first buyer. And if we just launch like that, the winners are going to be snipers. They're not going to be, your average retail users. It's going to be the people with the fastest internet and the fastest bots. And that's not what we want. We want everyone to have a fair chance at getting in early. So we're using a sniper protection fee. So that fee is going to start at a whopping 85%. It's high so that there isn't a rush to buy at the very start. And then that drops gradually, or it drops exponentially over 2 hours. So the first half hour or so, it's going to drop significantly.
I believe it's all the way down to 50%. Let me just look. What do we got? Oh, I pinned it in the holder chat. That's why. Ha ha ha. After half an hour, the fee is already down to 20%. So in the first second of launch, if somebody aped in $10,000, they would get, ignoring slippage and fees, because I don't have all that math in front of me, but at its face value, you would get $1,500 worth of token, and you'd pay $8,500 fee. Not very attractive. So snipers will not be doing that. It's not profitable by design. After 20 minutes or 30 minutes into this, there's a 2-hour fee decay. 30 minutes into that 2 hours, it's already down from 85% down to 20%. By the hour mark, it's down to like 5%. And so within fairly short order, this fee will just drop off. It's like a very steep start. And so the idea here is, like David said, we just don't want sniper paradise over here. This is a very attractive asset to be early to, being early, which is nice to say. There's a lot of assets out there. Hey, it's nice to be early to point farming. It's nice to be early maybe to a pre-seed round, although frankly, those are not ideal either for the last 3 years, speaking from experience. But most things, when you buy them on day one of launch, it's very risky because there's airdrops, there's instant unlocks from pre-sale buyers in some cases, and then over the period of the first year or two, sometimes even three, there's just a vesting schedule where the unlocks kind of take over, and you find out like, oh wow, like that dollar price I saw on the chart didn't really tell the whole story. There was a lot of hidden supply and emissions that I'm now getting rinsed by. And so resetting that model on its head, where if you're the first buyer of this thing or fifth or sixth, like being early is valuable. But we don't want to create this snipe situation. So a simple 2-hour decaying fee curve to stave off snipers.
Yeah.
That's it. That's certainly the everything you need to know. Beyond that, just stay tuned to our socials. We're going to have lots of updates and announcements as we go live over the next, rolling out over the next week. The platform is live next Tuesday, but it feels like a month-long launch because, like the 12 days of Christmas, it's like every other day during the week, there's going to be a new asset listing. And so there'll be a lot of activity on socials, campaigns and growth hack type stuff to just draw attention to this thing we've built. We've spent a lot of time, a lot of energy, a lot of funding, getting this in. Shout out to our investors who helped us along the way, and could not be more excited to just share it with the world. And your feedback is valuable, guys. So if you get on here and something's not intuitive, you spot something that's not quite right, or this is live in prod. There's going to be some updates very early on in the first week or two. I'm almost certain of it, as we just harden things and kind of, put everything together in a way that really captures the essence of the derivative that we're promoting here. Because if you've stayed on the stream this long, you can understand, like, this is pretty beautiful. It's a pretty beautiful design for anyone, especially obviously in particular, who's bullish on the assets that we're going to list. And over the next year, we envision listing, years, like we envision listing hundreds of assets on here. Why not just hold the NAV? We didn't even talk about tax efficiencies, but that's something that really stands out in my mind. So maybe we'll just touch on that briefly. And I should start off by saying I'm not a tax advisor. I have a tax advisor, and I'm in Canada. This particular tax advisor is also familiar with the US. Tax is a weird thing. It's highly regulated accounting stuff. So I cannot stress enough how much I am not your tax advisor. But as it were, when you borrow a debt against an asset, in most jurisdictions, that's not a taxable event. You still report it, you still file for it, but it's not taxable. And so using bonk as an example, if I think bonk is going to 10x this year, I want to pick up a bag of bonk. Okay, I go and buy some bonk, and it 10x's. Yay! I'm a genius. And then I go and I sell it. I sell it to USDC, and that's going to require a large tax bill. I'm going to owe a lot of cap gains on that. Alternatively, I could buy that bonk, mint my NAV bonk tokens, ride out that 10x. Because I'm such a genius, I'm gonna hit that 10x on bonk. But the NAV token, depending on where I bought it and how the market behaves, is likely, not guaranteed, but likely to outperform that 10x. If it outperforms it by 2x, that's a 20x, right? So there's amplification here in the NAV token to begin with, and that's already very cool. But the piece that I think is particularly interesting is at the end of that trade, when I'd like to close that trade, instead of selling my NAV bonk back to bonk and selling that bonk back to USDC, I can just borrow some bonk against my NAV bonk. And then when I sell that to USDC, what my tax accountant told me, and you need to check with your own, is that when I borrow out that bonk and sell it to USDC, it does not tap into my initial cost basis. It taps into the cost basis at the time of borrow. And so I go off to my tax accountant that year and I say, oh, I have a large debt in bonk, and I have this cash, which is debt, and I owe a debt. And so my balance sheet is balanced, it's debt heavy, and that's going to present some really interesting tax efficiencies for me. So, this is not a new concept, buy, borrow, and die. It's a billionaire's playbook for the last, 95 years. However, in comparison to, say, something like Aave, Camino, some of these other platforms that do borrow and lends, they're fantastic. One of the best products in DeFi. You're going to pay a lender interest over time permanently, and you're also going to be up against liquidation risk. And when it comes time for me to cash out, I want to sleep at night. I don't want to pay 6 to 8%. I don't want to worry about, if something happens in the market that I get liquidated. And that, by the way, is a taxable event. It's a forced sale. And so this presents that play, that strategy, without those two major issues, which is paying interest and being liquidated. And the reason you don't have to pay interest is because interest exists to incentivize lenders. But in this case, you're borrowing against the NAV, which is collectively everybody's bottom line. And so everybody who's holding these NAV tokens, who deposited their, in this case, bonk tokens, they are all lenders, technically. But the protocol is really what's lending it, and it does not need to be incentivized. The protocol is just the protocol, just math and code. And it doesn't mind, because this value that's locked in here is locked in permanently. So it can lend it out. Now, that's part of the reason it's such a rewarding experience to be on this exchange, is because when you hold a NAV token, you're providing liquidity, right? The bonk that I deposited in here is somebody else's sell depth, borrow depth. I'm also the lender, because some of that bonk that I deposited to get my NAV tokens may be lent out. Shouldn't I get paid for that? And you do. 25% of the fees go into the NAV itself, which helps me as a holder, increases my credit capacity. And if I slide over to the earn page and I have some Prana from the Nirvana app, another 25% goes over there. And so you kind of become a holder, a market maker, and a lender all at once with these assets. And you get paid for it. So that's probably my favorite unlock. As somebody who is very, very engaged on the tax front. Like I cross every T, I dot every I. I want to do it right, and I want to pay my fair share. But if there's rules out there that allow me to access my capital through debt, I'm absolutely going to do it. And if that debt can be interest and free and non-liquidatable, all the better. So that's something that, depending on where you live and who you are and whatever, check in with your tax accounts. But this is one of those potential unlocks that I think changes things bigly. I'm very excited about this as well.
Me too.
How's our time? We are coming up near the top of the hour. So if there's any final questions, let's give a quick scan. Titan Exchange, it's going well. Somebody asked, how's it going with Titan Dex? They're good. Spoke to them this week. They've got a very long lineup of people they want to integrate. We've got a long lineup of, technical build items. So we're in the process of preparing our integration code, and we're in their lineup. So, things are going well. I'm actually going to be seeing the founder next Saturday at a Monkey DAO meetup. So we'll get a more in-depth chat there. And I'll certainly be lobbying for speed on all fronts, because I think once you unlock access to these off exchange, it really obviously will be a very powerful growth piece for us. And it's something that I've had top of mind for a long time. And it's happening, but it's happening at exactly the speed it has to happen, which is never quite as fast as I want. But that is the nature of growth, gradually and then suddenly. Any other questions in the chat? I see one. No. Shout out to Manny. Good question, asking about raffle systems and all that with regards to Prana and places. No, we haven't considered that. It's just too complex. We want to look. There's a lot of complexity here. I think at the end of the day, we're still in this phase where we have to explain how everything works. And so that makes it feel like this super complex product. it's not enough to just be like, hey, it could go up more than it can go down. Like, that's in a nutshell what it's engineered to do. But that's a very dubious claim. So we're at this phase and stage right now where you really have to walk people through it. And as this proliferates and becomes more well known and understood, and it's like, wow, that actually can work. Someday possibly even common sense. Um, then this gets a lot less complex. And we haven't even changed anything. It's just, the understanding's there. We certainly don't want to add complexity on top of this learning curve. So things like raffle systems and getting placement to be the first buy or whatever. This is just no. We're going to have a decaying fee, and people will decide at what point on that fee curve they think it's worth it for them to buy. My 2 cents, not that anyone asked, but as a trader, if I don't fully understand how something's going to go, or if I don't feel like I have significant edge, I typically play very small. So, what am I going to do when the soul market goes live next week? I'm going to be buying it. I'm probably going to put like $10 in early, like super early, whatever. I'll pay a stupid fee just to see it work. I'm like, oh, look at that. It works. I'm not going to make some massive, retirement attempt bet on the first market. That's crazy to me. Someone might, bold move. I think it's, for those of you who are wondering, my general rule of thumb is if I don't quite know how something's going to play out on day one, I'll move small, move slow, and just learn. And the cool thing is there's going to be a lot of these launches. So, I'm not going to sit here and be like, everyone should go all in the first 5 minutes. Like, no, that's insane. If you're not sure, just relax. Market's not going anywhere. So I'll be in there on day one with this thing, but probably just messing about, learning it and trying to see what, human behavior plays out, what meta evolves around it. And at some point, I'll feel a lot more confident with the decisions I'm making, and I'll make different ones. Yeah, Nathan's asking about the burn and buy, the burn to earn. I don't want to get too deep into that, but high level, this is the idea. Unless David, actually, you want to take that. I've been talking my face off. We got 5 more minutes, so
Sure.
If you want to briefly, maybe just the rationale, roughly how it'll work. We don't have the UI here, so we don't want to go too deep, but go for it.
Yeah. So the reason burn to earn is coming. So prana is a token that you earn by staking ANA. You just get continuous emissions. And there was a way to burn prana previously, and that was to realize prana. That obviously created dilution. We turned that off. And we decided that prana would be better if it were scarce. And the way to realize that is to do burn to earn. So instead of staking your prana and earning passive revenue that way, you got to burn it to earn it. So every week on every market, there is all of the prana revenue goes into a vault. And if you want to earn a piece of that revenue, you have to burn some prana. So you deposit prana into this pool, and it's going to be sort of gamified, where if you deposit prana early in the week, early in the epoch, then you'll get double the amount of earning power as if you were to deposit at the very end of the week. And this is because when you're depositing early in the week, you have imperfect information. You don't know how much revenue is going to be there. You don't know how many other prana are going to be deposited. So you get an extra boost in your power for taking that risk. And then the other mechanism that recently just got added is that you're actually going to be able to withdraw that prana throughout the week. Let's say it's less revenue than you expected, or more people deposited prana than you expected. So you are able to withdraw that prana for a penalty. That
yeah, so I could change my mind.
Yes.
Maybe I ape in right away because I want that max boost on my burn and my earn potential, and then halfway through, there's a little less revenue than I thought, or some big whale comes and shits in my pool and just dilutes it. As you pointed out, that was just added. And don't worry if you didn't know that. I only found out yesterday. Like I said, Sid is heads down right now trying to get this out live for Samsara. And he shared with us like a little doc update on exactly how the logic and mechanics will work. And as soon as you need to know that, as soon as that's something that's going to be usable, we will have it very clearly articulated. So don't stress on it. Be excited about it. But those things, yeah, the withdraw feature. So up until the moment of the epoch closing, and the reason I pulled up the Nirvana app, because we had a good question last week. People asking like, what's these epochs? Is it going to be double, like 2 weeks or a month? And it's like, it's just going to align with Nirvana governance. Every Monday at 11 a.m. Eastern, the epoch ends. And I don't see any reason why we should change that. So all the samsara governance epochs, all the burn to earn epochs, everything will just end at that time and reset. And long term, that is, it's a really interesting. I think personally, I think this burn to earn is going to get copied, and that's fine. I think it's a better model. And I'd like to use the example of Jupiter. Let's say I forget the exact buybacks they've done. Let's say in the last year it was like 70 million. I don't know. It could have been higher. I don't remember. So the first way you could do it is buy back the way they did. So you have $70 million of revenue and you go to the market, you buy it. Alternatively, throughout that year, let's say that's what they did in a year, you take that 70 million as it's coming in weekly epochs or monthly epochs, and you just place it into a pool. And people could take their Jupe tokens and deposit them into that pool and grab their pro rata share of that week's pool, and those Jupe tokens get burned. And so every dollar of revenue is going to somebody who burned their token. And they might, the people might burn a lot that week or might burn a little. It's way more efficient. I love it. I'm not saying Jupe should go and do this with theirs, but I imagine that at least a handful of other projects, as this kind of proliferates and becomes better understood, I just get this feeling that the efficiency there is going to be very attractive. So be nice to see. Be nice to see some other projects pick up on that. So that's what we're kicking off. And so, yeah, over time.
Yeah, it's a very efficient and honest way to price a token. And the result that it's going to create is that prana will become very scarce. When you combine this with the other new thing, which is a decaying prana reward rate, eventually prana is going to become deflationary.
Yeah, let's talk.
So it becomes sort of a store of value in its own right. It doesn't have the same floor price that Ana has, but it is still tied to the Nirvana ecosystems. It captures a piece of that revenue, and the supply is going to shrink over time.
Yeah, right now we have an emissions rate of prana, and it's going up. Somebody's really going crazy with this vote. They've got like a sixth of the percentage of prana is just saying, "Hey, give me more prana," and that's fine. At this point, whatever. I actually told someone, I was like, "Yeah, I'm just going to be like stacking prana until this burn goes live." And so right now it's like it's emitting at 127% per year. So when you look at that exponential growth, it's going to be pretty problematic pretty quickly. I mean, as soon as Realize went off, you can see this is steepening, and that would be exponential. Next year it's 6 million, next year it's 12, and very quickly, not too long down the road, we would end up in this world where there's not enough zeros on the screen to cover all the prana. So the burn was a necessary add, and the shift that you'll see once this new governance piece is live is instead of an emissions rate, it'll be a decay rate. And so, in other words, this emission rate is set to decay indefinitely. And the governance piece will just be at what rate does it decay? And the default will be 15% per year, which ends up being like a Bitcoin halving schedule, 50% per year. 15% per year compounded for 4 years is 50. So that's the idea. We can choose if it wants to decay fast or slow, but it will decay. And as David pointed out, become deflationary eventually. And then you stack on top of that, all the revenue going out to prana needs to have some burned prana to grab it. Things get spicy the more down the road you get, which with what we've got planned and the vision we have for Nirvana long term, gets really exciting to extrapolate on. The last thing, ARP, annualized revenue per prana, is how it looks when you stake to earn. When you burn to earn, very serendipitously, we discovered just last week or just this week that we don't actually have to change the ARP acronym. It's just going to become average revenue per prana. And so each week, every epoch, prana is burned across all these pools to grab a piece of the revenue from those pools. And all of that, well, I guess for this pool, there'll be an average. So each week when someone burns their prana, they receive 75 cents. So that's this week's, it'll be just 75 cents. And then the next week, maybe it's $1.50. So it'll average those 2 weeks. So over time, the ARP per market will evolve based on what is the average amount somebody's getting every time they burn their prana. That's my alarm to tell me to get off here because I got a call coming up. But anyways, so ARP is not changing. It's just changing from annualized to average, which is a nice serendipitous little bit of nerd for today. We had a good laugh about that yesterday. Sid's like, oh, we don't actually have to change this. It can just be that. I was like, yes. Anyways, thank you guys for tuning in today. If you're absolutely completely new to Nirvana, please join the Discord. Ask questions. Our community is second to none when it comes to just taking you through stuff. There's a lot here, but when you want to build something that has, paradigm shifting implications and potential and ambitions, you got to reinvent a lot of wheels. And we've done that here. We've done our best to take you through it. It's early days. I feel like we're in our second inning on the Nirvana front. This is really our second product we've ever launched. And it's going live in 6 days. So very excited. It's a good time to pay attention to this. It's a major shift because, of course, 100% of the platform revenue, right? 50% of total revenue on Samsara goes towards its users, either through prana or through the nav floor lifting directly. And the other half goes to us because we want to build this thing and we want to grow this thing. And we're going to be using 100% of the revenue we get from this to buy Ana, to store in our treasury and borrow against to fund operations. And so the shift on the Nirvana side and the Samsara side, it's all just happening. It's beautiful. It's a good time to pay attention. So thanks for joining us and paying attention today. We will be back with another Ashram Hours next Wednesday. That'll be Thomas and I, Sid and I. Oh, his name's already doxed. But anyways, I call him Thomas. It's Sid. Sid will be back on Wednesday next week with myself, and that'll be after our first market is live. So we'll be back to kind of explore the launch and go over it in detail. And really nice to have you on today, David. Thanks for joining.
Thanks for having me. This was a pleasure.
We'll do more of these. Yeah, we can get you on here a little more. There's going to be a lot to learn, a lot to explain, and you are second to none at doing it. So
thank you, my friend.
Looking forward to that. Okay, guys. Have a wonderful day. Stay safe out there.
Blessings, guys.